Now, many of you that are with us today that are considering whether to join St James's Place are interested in our proposition, specifically our proposition to clients via the financial advisors that make up the partnership. I'm delighted that Tom Beal is here with me today to answer a few questions to bring our investment proposition to life. Tom, first of all, thanks for joining me today. And before we get started around the investment proposition, I wonder if you could give us a little bit of background to your career and specifically your role here at SJP.
Yeah, of course. So I've worked in the city for 23 years now. I was 8 years prior to SJP working at companies like Thomson Reuters, Credit Suisse, JP Morgan, and I saw both sides of the city really. So the asset management side, but also the investment banking side, which gave me an interesting sort of rounded perspective on what makes the stock market tick. I then joined SJP and I've been here, it's my 15th year now, and throughout that period really helped grow and develop the internal investment team. And I was one of the first hires with a city background. Most of it was outsourced prior to me joining, and we've now got over 200 people in the internal investment team. And my role's evolved from being deputy CIO to CIO to now director of investments, which means I sit on the executive board of SJP. I'm a director of Rowan Dartington, one of our discretionary subsidiary companies, the unit trust company, and I chair our investment committee.
So bring that to life for us on a day-to-day basis. What does the day job look like?
Well, there's a lot of board meetings to start with, but aside from that, I would describe my role as having three key elements to it. First of all, how do we deliver performance on the investment proposition, which I'm sure we'll go on to talk about in a bit more detail. The second one is how do we keep clients' money safe? And that's something which is often overlooked when all boats are rising and markets are doing phenomenally well. There's a lot of decisions that go on behind the scenes about either things that you don't do. So we've avoided things like crypto pitfalls. We've not got ourselves in any liquidity challenges or leverage issues. And that's a really important element of an aspect of investing. And the third part, critically, is managing behaviours. And that's how we manage our behaviours as an investment team, but how do we support the partnership to be able to explain the story behind the investment so that they can retain confidence in what we do, and their clients can equally retain that same confidence.
Thank you. Now, I imagine over your career so far, you've seen lots and lots of turbulent times, but there's a very interesting current fiscal and geopolitical climate. What specifically has that had on markets and our investment proposition?
I think the big shift that I would describe is really following the financial crisis, where we've just had this sustained period of ultra low interest rates, lots of monetary stimulus to try and get the economy going. Obviously, then we had that precipitated in stock markets where we had COVID, markets crashed, and then in the aftermath of COVID, we had quite a sustained rally where all boats seemed like they were rising. And really, since the end of 2021, that's when we've really started to see that reversal of that post-GFC cycle where inflationary fears started to build up. We started to see central banks be much more aggressive with their monetary policy. So we've gone from this sort of very much sort of reflation type environment to entering this sort of inflationary regime, which has left us on the cusp of some potential recession. And I think the reason why that is so important is that we've just had this era of ultra low interest rates, which has meant that that's really supported a lot of companies perform incredibly well in terms of their share price. It doesn't necessarily then mean all good quality companies, because when you've got the cost of money is nothing, it's effectively easier to sort of grow your business. And I think what's really interesting for me now is we're at this point where we're entering more of a normal period in terms of where interest rates are, which should create a more efficient stock market going forward, which from my perspective is quite an exciting period to be entering into, because it means that skill should become a much more dominant factor in the outcome that we deliver, rather than all boats going up, which is the era we've sort of been in recently.
Yeah. And leading it back to our investment proposition, how would you describe how it stands today? And I suppose importantly, How's it evolved over the past decade?
Yeah, and in some ways, there's a lot of similarities today in what we've always done. So our investment approach has been very much built on a philosophy of no single company has a monopoly on good ideas. So don't try and build it yourself. Outsource to who you think's the best, and that's really been the premise of what our proposition has been about all of these years. We used independent consultants to help us identify who we thought was the best, and we had an investment committee that sat on the top of that to help make those decisions on hiring and firing. And that core is what we sort of called select, monitor, change. So we select the best managers from the pool of global talent. We then monitor them to make sure they're doing the right job. Yeah. And then as appropriate, we change them. And that is very much still the core of what we do today. We've obviously evolved it and improved it, but that is still the foundation of what we do. How we've actually evolved, though, is we've then supplemented that with a more sort of top-down approach, so put much more emphasis on asset allocation, because there's no point having the best manager if that manager isn't in the right part of the market. So it's really important to have a robust asset allocation process. And we've also spent a lot of time embedding responsible investment across the entirety of our proposition. And I think across all three of those things in the wealth space, we're world-class at that sort of top-down asset allocation, bottom-up manager selection, and with responsible investment embedded throughout.
Tom, thank you. And actually, over the last decade, as a business, St James's Place has focused very heavily on being a responsible business. How have you seen that culture bleed through to our investment proposition?
Yeah, I mean, it's been a huge part of it, Warren, and our investment proposition has been a big part in how we've been helped to evolve as a responsible business as well. And in fact, MSCI rate all PLCs on their ESG criteria, and we've seen our corporate rating steadily improve, and we're now AAA rated as a business, which is fantastic. On the investment side, it's something we've done for a number of years. Actually, it's not just a new fad. We've for over 8 years now, we've always surveyed our fund managers on how they approach responsible investment. We think it's a critical part of their risk management tool, and it's quite insightful for us on how they make decisions. And we've been gradually sort of stepping up the quality of what we expect from our fund managers over the years, to the point today where they're all signatories of the United Nations Principles of Responsible Investment. We as a business are signatories or members of the Net Zero Asset Owners Alliance, and we're signatories to the Stewardship Code, which is a very high bar of efficacy within the responsible investment place. So it's something that we take really seriously. It's embedded across everything that we do, and we're continuing to look to improve that, but to do that in an authentic way where it actually delivers the right sort of outcome for our clients.
Yeah, thank you. And what makes our investment proposition unique in the marketplace? And I suppose linked to that, why would financial advisors or clients even find that attractive?
I mean, unique is a strong word, and I think the most important thing for us is what makes us distinctive. When I look at really what makes us different is we manufacture our own funds, and so we don't invest in a third-party fund. And the real power of that is if we have an issue with any one of those managers, it is entirely up to us to be able to change that manager at the drop of a hat, which means that the client remains invested in the same fund. We change the manager behind the scenes, and that client still stays invested in the same fund, which gives them a sort of smooth path, which from a financial planning perspective, I think is a really important trait of what our proposition is. From an investment perspective, I would say what makes us unique is we just try and stay ahead of the curve. So back in the day, an investment committee wasn't commonplace. We had one of those before it became commonplace. We used institutional consultants before they became commonplace. Lots of other people then did the same. And what we're doing now is we've been investing heavily in data analytics, lots of different types of insights into our process, and broadening out the different tools in the bag effectively to make sure that our clients have access to assets which potentially other clients maybe don't have access to, which really puts our proposition at the forefront of what's available in the market.
Thank you. And you mentioned earlier, Tom, the robustness around selecting, monitoring and changing fund managers. So what steps and what do you look at when you're selecting a fund manager?
I think the first thing to say is that there are no shortcuts to this, and also identifying skill in fund managers is really hard, and people conflate performance with skill an awful lot, whereas actually there's an awful lot of luck in good performance as well. So what we really try and do is just identify what is the DNA profile of what makes a manager tick. So we want to understand, for those managers who've delivered success in the past on a consistent basis, we need to understand every element of the conditions that led to that success. So the business they were in, the remuneration of that fund manager, the depth of the team, the way they made decisions in good markets, the way they made decisions in bad markets, how they dealt with new news in companies. It's really building out that DNA profile of absolutely everything of how they make decisions, which then means you've got a framework to then monitor against. And then throughout that work, really what you're looking for is an edge. So where does someone really have an edge over anybody else? And typically we find that edge in three different places. It's either an analytical edge, an informational advantage, or a behavioural edge, which is how people make decisions.
You talked about those three edges when selecting a fund manager. Perhaps you could bring that to life with an example.
Yeah, perhaps I'll use two actually. So one of our US-based equity fund managers, so typically asset managers employ analysts from other asset managers or other banks, and that's typically the sort of recruitment path that these businesses go down. But this manager in the US, they actually employ a whole team of former investigative journalists. So the reason why they do that is because it gives them that informational edge over and above what other people on Wall Street are actually seeing in companies. So they dig deeper, they give them different insights, and we've seen really strong evidence of where that gives them an edge in their research process. Another good example is with a well-known global fund manager where we've observed an informational edge. And the example that we saw was that they buy these huge data sets and they try and blend these data sets together to give them insight into what's happening in businesses before they publish their results to the city. And in this instance, they buy GPS data of freight companies in the US, so lorry drivers effectively, and then they buy data from weigh stations which actually weigh those lorries in the US, and they can tell from that weigh station data and the proximity of that from the GPS data to the factories, they can estimate the company inventory levels and therefore sales data before they publish their accounts. And that's a really good example of where a fund manager gets an informational edge. And that's really what I mean by edge in the process.
Okay, thank you. And obviously sometimes there is that need, as you highlighted before, to actually change a fund manager. So what might lead to that, and what do you look for when you're changing a fund manager?
Yeah, and effectively it's sort of the reverse of that. So if you've put the hard work in to identify what that profile is of what makes that good manager tick, then effectively that's your framework to monitor against. And when something changes or something material changes, you don't necessarily know that that's going to lead to a much worse outcome. But what it does do is it widens that range of possibilities. And so from our perspective, you then materially lose confidence in that future manager. So we spend a lot of time thinking about how we as an investment team make better decisions. And so often we actually write down what those criteria would be to fire a manager in advance. So we call it like a pre-mortem. So if this were to happen, we would do X. And the important thing with that is that you have in life, every aspect of your life, you have decision creep. And so it's in the cold light of day, before there's a stressful situation, you write down what are those circumstances which would make me change. And we've used that to good effect with a few examples in the past.
Thank you. What do you see as both the challenges and the opportunities for our investment proposition in this year and beyond?
I think the challenges refer back to the market environment I mentioned earlier, that in a world of more normalised interest rates with geopolitical tensions, it feels like we're entering a period where we may have more volatility in markets. And so that big challenge there is ensuring we've got appropriate diversity across our investment proposition. And we saw in 2022, it was an incredibly difficult year for markets where there were very few investments that actually worked well. So sources of diversification, you have to be more forward-looking rather than just looking back to the past. But I genuinely think from an opportunity perspective, it's really twofold. On one hand, volatility creates opportunities, and in that sort of environment, I genuinely believe active management should come to the fore. And our process is about, as we said earlier, selecting the high quality managers, but then packaging that up in the right asset allocation framework.
Yes.
And I'm convinced that that is absolutely the right approach coming into the market environment that we look to in the future. I think one of the other key challenges that investors face, and it's very much the same as clients and advisors, it's just managing the behaviour through those turbulent times. And as much as we like to talk about, we can add this bit of alpha here and this bit of alpha there, I'm convinced the most critical part in clients achieving their financial goals is that collective management of behaviour. And I think that's what SJP does fantastically well, from the advisors all the way back through the investment teams. It's how do we control those behaviours at each element of that process. And I think that's going to be a huge opportunity in the future.
And Tom, those opportunities that you talked about, how do you see those playing out for a partner or advisor in the partnership?
I think the good thing, Warren, is that the way we've designed the investment proposition is that there's a broad range of choice for our partners to use. So on one extreme, we have a range of funds which we call Polaris, which effectively means that we almost do everything on behalf of the partner or the advisor, from the asset allocation to the currency hedging to the fund design to the manager selection to the ongoing rebalancing, which completely frees an advisor up or a partner up to spend their time on doing what they do best, which is advising clients. On the other hand, we have a broad range of funds which people can choose from if they want to go down a more bespoke route. But whichever of those paths our partners choose, they can do that in the confidence that sitting behind that is a really rigorous and robust process, which is well documented, well governed, which is only going to become of increasing importance in the future when we see the amount of regulation which is coming down the line and things like consumer duty coming in. This is going to be a huge amount of scrutiny. So I think having that delegated to us within SJP is going to be a huge peace of mind for financial advisors.
Thank you. That's really helpful. And it links actually to my final question, which is actually, what does your kind of broader team do to support those partners and advisors that are facing into the clients?
We have a number of different teams who support the partners and advisors. So we have a help desk function, which is there to respond to emails and telephone inquiries. We have a consultancy function, which offers face-to-face support to the partnership. And we have a private client function, which supports higher net worth client cases from the financial planning side, but also some of the more sophisticated investment planning side of the role as well. And then we just have a regular program of different communications on investment, whether that's just be a daily update on markets to a weekly review of the week that's gone by, or more insights from our fund managers, from my investment team, be that through videos, be that through investment conferences, and a whole plethora of different things.
Brilliant, Tom. Thank you. It's been a really insightful conversation. Hopefully our guests have really enjoyed that. But equally, what we know is often that the answers to questions actually trigger more questions. And if there are some, we'd be delighted to answer those. And any member of my team that's invited on today can make sure that you get the right answer that you need. Thank you.